Good afternoon and welcome to the UK Finance webinar channel. My name is Ian Burgess. I'm the Director for Cyber and Third-Party Risk here at UK Finance. And today for the next hour, I'm delighted to be joined by Craig McLeod and Alex McGill from PA Consulting. I'll do some introductions first of all. Craig is a lead consultant in financial crime at PA Consulting, and he has worked for 12 years across fraud, AML, KYC, CTF, transaction monitoring, FATCA, CRS, and sanctions. A lot of acronyms in there. He has led and advised some of Europe's most complex financial crime programs, including implementing cutting-edge AML technologies, leading skilled persons reviews, conducting end-to-end AML framework assessments, and redesigning financial crime operations. Secondly, turning to Alex. Alex leads PA's work in regulatory technology and works alongside his clients to help them to understand the RegTech vendor landscape and select the best partners to support their needs. Alex also has extensive experience of delivering large-scale IT change programs for banks and regulators and works with clients to implement new RegTech to address their challenges. Now, just before I hand over to the speakers, I'll cover off a few housekeeping items for you. At the bottom of your audience console are multiple application widgets you can use. If you have any questions during the webinar, you can click on the Q&A widget at the bottom of the screen and submit your question. We will try to answer these during the webinar, but if a fuller answer is needed or we run out of time, it may be answered by email. Please note that when you do ask a question, your name and your organization is not disclosed to other webinar attendees. So please do encourage you to ask as many questions as you can of Alex and Craig today. A copy of today's slide deck is available on the resource list widget, which is the green folder at the bottom of your screen. An on-demand version of the webinar will be available at the end of the day and can be accessed using the same audience link that was sent to you earlier. If you want to contact the speakers directly, please click on the mail envelope next to the presenter's photo. You will also notice the survey icon that if you click on, will ask you about future learning requirements. You can expand the slide area by clicking on the maximize icon on the top right of the slide area. And if you do have any technical difficulties, please click on the help widget, which has a question mark icon and covers common technical issues. Now, Alex and Craig intend to present for around 45 minutes and then answer your questions for the remaining 15 minutes. So without further ado, I'd like to hand over to Alex first of all to kick things off. Alex, over to you.
Thanks, Ian, and good morning, stroke afternoon to all, depending on where you're joining us in the world. We're really delighted that you've been able to join us today for this webinar, Customers, Compliance and Complexity, Navigating New Technologies to Strengthen AML. As I'm sure many of you will be aware if you work in compliance, a significant portion of a firm's income is spent on getting it right. And we think it's typically around 8% today and will only increase in line with more and more regulation that's coming down the pipeline. And a survey we ran in 2018 identified that 55% of financial services leaders recognize that the way they manage risk and compliance will be better. So finding ways to use new technology to streamline and improve risk management and compliance approaches is a massive opportunity. But having said that, it's fair to say that the market for technology is fast moving, it's complex, so making the right buying decisions is increasingly hard. And that was all before COVID-19, which, as we all know, has created new disruption. And as a result, we've seen surges in fraud and scamming, phishing emails to bogus charity events, and the like. So more than ever, it's clear that financial crime is an area of compliance banks can't afford to be slow moving on. But the question is, how do you go about navigating this complicated vendor landscape and making the right investment choice? Well, we believe doing this means keeping the ultimate ambition of the firm front and center of this process, and that is providing seamless, real-time and resilient services to your customers. So today we're going to share some thoughts on the trends we're seeing across the market, along with different approaches to keeping customers front and center of risk and compliance processes as you navigate new technology that exists. And today we're going to be particularly focused on financial crime. Through the webinar, we're really interested in your views as well. So we've scattered some questions throughout via polling questions, and we'd really like you to take part in these so we can have a snapshot of what everyone across the marketplace is thinking. And as Ian says, in addition, we've allocated 15 minutes towards the end of the webinar for any questions you have So please do feel free to submit your questions through the Q&A options within the webinar panel. Now, for anyone that doesn't know PA Consulting, we're a global innovation and transformation management consultant. Our purpose as a firm is all about bringing ingenuity to life for our clients, especially where they can use technology to create a more positive human future. Within financial services, our team of experts combine deep knowledge of banking, insurance, pensions, private equity, and asset management, with expertise in strategy, technology, digital, and innovation to help our clients adapt, transform, and succeed. I'm joined today by my colleague Craig, who I'll pass over to now to tell you a bit about our work in financial crime.
Hi everyone, and just to echo Alex's comments, it's delighted to be with you today. As Ian briefly mentioned, so PA, financial crime is a key focus for us as a firm. We have just over 250 resources globally within our Financial Crime Centre of Excellence. And within this space, we work across the full spectrum of financial crime. So what we mean by that is from KYC to transaction monitoring, sanctions, ABC, fraud, etc. Some of the acronyms that they mentioned up front. The types of work we do also varies greatly, from skilled person reviews to short, sharp assurance exercises, right through to large sort of multi-year transformation programs, a lot of which are in the technology space, of which Alex and I will talk to today. And in fact, many of the themes that we're starting to see from a trends perspective around new technology, around automation, around sort of improving customer experience are absolute paramount and common across the majority of the conversations that we have with clients, and we see as being really important in the market. I'll now hand you back to Alex to go to the next section.
Thanks, Craig. So at PA, we see huge opportunities for the industry to reduce the burden of compliance. And combating financial crime is one particular area where the benefits of technology are clear. As a result of both complex regulatory hurdles and constantly adapting criminal landscapes, firms struggle with onboarding to onboard customers in a timely manner and keep abreast of transaction monitoring requirements. And this is forcing a lot of financial institutions to rethink their internal systems, their processes, and their third-party vendor relationships for financial crime. And technology is key to achieving this. And as part of our work in recent years, including leading studies into new technologies in financial crime on behalf of a number of regulators, we've analysed a substantial number of often conflicting viewpoints on many of the new technologies emerging in the financial compliance space. And it's particularly true for onboarding and KYC, where there is significant opportunity to utilise technology to strengthen risk controls and regulatory compliance, while creating better and more frictionless customer journeys and ultimately more efficient operations. But before we tell you what we think, we'd like to hear what you think. So I'd like to open things up with a polling question, please. And you should see one shortly appearing on your page. And again, we'd like you to all complete this. So the first question is, where do you think technology has the most value or potential benefit for KYC or onboarding within your organization? Is it A, ID and V, B, screen including PEPs, RCAs or sanctions, C, pre-filling of data from publicly available sources or internal sources within the bank, D, utility models, E, adverse media, or F, case management stroke workflow? I'll give you all 30 seconds to respond to that and just repeat the question again. So where do you think technology has the most value or potential benefit for KYC or onboarding in your organization? A, ID and V, B, screening, data prefill, utility models, E, adverse media, or F, case management stroke workflow? Again, we'll give everyone a couple of moments. Okay, so we've got the results, and overwhelmingly, it would seem that 45% of you feel that ID&V presents the most potential benefit or value, closely followed by screening with technical sanctions. And then slow down, adverse media is often a bit lighter with 4.2% of you thinking that, and pre-filling at 6.3%. So this is a really interesting set of results, and again confirms a lot of what we feel as well, where we see ID&V as a huge opportunity for improving KYC and onboarding process. Interestingly, a number of you felt that pre-filling had quite low potential benefit, and actually we feel that that has a huge amount of benefit, and we'll come on to why shortly. So thank you for that. Okay, so we've all been there. You want to open a new account for a service provider only to be met by a lengthy online questionnaire where you have to provide your life story and dig out documents you filed in the back of your cupboard 5 years ago. And this is particularly true in financial services, owing to complex KYC and AML requirements that are ever evolving. So this first impression with your service provider sets the tone for your relationship with the organization. So put simply, the onboarding experience is either make or break. But if there's so much technology available, then the real question is what's holding firms back? And again, we have a number of thoughts on this, but we'd like to hear your thoughts on this. So again, another polling question. And hopefully you can see this on your screen now. Question is, what are the main barriers holding your organization back from adopting technologies to support KYC and onboarding? Is it A, uncertainty around regulatory expectations? B, limits in available technology suited to your needs? C, too much choice of technology and hard to identify the right vendors? Or is it D, investing in compliance is not an organizational priority? And again, we'll give everyone 30 seconds or so to complete this, and I'll just repeat the question again. What are the main barriers holding back your organization from adopting technology to support KYC and onboarding? A, uncertainty around regulatory expectations. B, limits in available technology suited to your needs. D, too much choice of technology and hard to identify the right vendors. Or is it D, investing in compliance is not an organizational priority? Again, we'll give you a moment to complete that. Okay, results are in. So 20% of you feel that there's uncertainty around regulatory expectations. 32 limits in the technology suited to your needs. 27 is difficulty in finding the right vendors. And 20% is investing in compliance is not an organizational priority. So quite an even spread, I think it's fair to say, with the focus on the limits in the technology and the challenge in finding the right ones. And again, this is something we see often across a lot of our clients, is that, and we'll come on to the next section, but technology works very well in a sandbox or concept environment. But then when it needs to be configured, there's challenges around that. And addressing that is often difficult. Finding the right vendors is, again, something we have to see often. And I think there's something like over 1,000 RegTech vendors in the marketplace now, and finding the proverbial needle in the haystack is often challenging. And again, we'll come on to the new trends and emerging themes in that space. Okay, fantastic. So across KYC and onboarding, we're seeing a number of technology trends emerging that have significant potential to improve customer experience while improving risk controls and operations. And these include, firstly, pre-filling of customer onboarding data from golden sources. So increasingly, a fundamental component of KYC more broadly is the ability to collect customer data from a wide variety of data sources. And as far as possible, pre-populate this from relevant bank systems or external sources, and leaving only missing data that needs to be requested from the customer. And this improves the customer experience, but also reduces the risk of false or inaccurate information being provided. So it's massively beneficial for both the customer experience, but also internal risk controls. Across the sector, we've seen clients and firms have a preference for this approach, and many firms are adopting API-driven solutions to source data from a variety of verified external sources and also data aggregation platforms that exist. And increasingly, many firms are also looking to scrape publicly available data from across the web to populate KYC and onboarding data. For example, social media feeds or other information that is available on the web. Now, while this is true, many firms struggle to understand the regulatory appetite for pre-filling, as it varies across geography to geography. And in our view, it's more readily accepted where there is well-functioning electronic ID solutions that are available, and you have a regulator who is forward-thinking and pro-innovation. The second area we've seen is an uptick in electronic ID and verification of customers. And this, again, is a critical requirement of KYC and customer onboarding. And it's increasingly common for firms to utilize externally validated data sources and biometric details to identify their customers and verify that it is truly them. And ID&V technology has taken massive strides forward in recent years, with huge advancements in biometric technology that are now commonplace and increasingly accepted in consumer lives. And alongside this, we've seen advancements in machine learning, AI, natural language processing, which have all improved document verification, which is often a critical in verifying the proof of ID and residency of clients. And as non-physical client relationships are becoming increasingly common, particularly with COVID, across financial services, we're seeing more and more innovative steps being taken by firms to streamline the ID&V process to meet the regulatory obligation. For example, we're now seeing selfies, video conferencing, all common in ID&V process. And over the next 3 and 5 years, we envisage that firms will become even more innovative and seek even more non-invasive ways to verify that their potential customer is who they say they are. Now, the use of IP addresses to match locations, Google Street Views on addresses, data scraping from open sources, and open banking APIs understands where the potential client is spending money, are all ways in which firms are exploring satisfying their ID&V requirements without having to request the documentation from their client. The third area is advances in PEP and sanction screening solutions. Now, while PEP and sanction screening has been commonplace in AML for a while, increasingly we're seeing technology advancements focused on reducing common pain points within these solutions. And this includes better probabilistic matching and analytical technology to help identify individuals or entities with a higher degree of certainty, reductions in false positives through analytic machine learning and natural language processing, along with translation technologies that enable organizations operating in multiple jurisdictions to process different languages and scripts. The fourth area is adverse media. And adverse media screening has traditionally been formed by operational staff as a manual activity due to the requirement that needs you to look at complex information and interpret. And through developments in machine learning, natural language processing, again, we're seeing introduction of partial or even fully automated adverse media screening solutions that have the opportunity to deliver big operational efficiency improvements. And these technologies are constantly evolving and adding to their database, providing greater depth and breadth coverage than traditional structured Google searches do. The fifth and final area is automation of case management or workflow. And this is an extremely important part of managing the end-to-end KYC process, but often the part we think the least about. And there's many vendors who have adapted their core case management workflow solution and in many cases have created customized or specialist KYC tools. And what is consistent is that most of these vendors have a predefined workflow that they encourage organizations to use with configuration built in for specific parts of the workflow. And typically the first decision that needs to be made when looking at these vendors is, are they suitable for your the way that you do things within your organization, or might it be better to build something in-house rather than buy an off-the-shelf solution? And in our experience, an in-house build can be just as effective with limited impact on time to market, depending on whether the client has the in-house technical expertise and capacity in the organization to develop a solution. And when considering an off-the-shelf solution, we think it's really important to consider how that would fit within the client's wider architecture and whether either the processes that you use in-house can be flexed to meet the way that the solution does it, or if vice versa, the solution can be flexed to meet the way that the client prefers. So despite numerous positives associated with KYC technology, plenty still get in the way of adoption, as we covered off within the poll. And we believe there's four main reasons for this. The first reason is that the technology doesn't live up to the hype when configured to the needs of the organization. And a number of you alluded to this within the polling. And from our research, this is something we've also seen, and we find that many FS organizations are frustrated by new and innovative technology that sells them the dream when operating in a sandbox environment, but fails to deliver when out in the real world. And FS firms are incredibly complex organizations. They often require a high degree of configuration for their technical solutions to meet the needs of the organization. And this often pushes out-of-the-box product to breaking point, resulting in underwhelming results that don't often live up to the hype of the sales pitch or early success achieved via a proof of concept. The second challenge is that there's no panacea, and solutions only solve one problem and don't provide an end-to-end solution. And firms who are looking for one vendor that does everything well across their business lines, geographies, are unfortunately going to be sorely disappointed, because frustratingly, they simply don't exist. New vendors do though, offer highly specialized and tailored propositions that address specific use cases firms often struggle with. And we see that firms who've created highly effective onboarding processes are the ones who've been able to identify those best-in-class vendors for each of their use cases and stitch them together to form a partnership and a really effective onboarding technology platform that pieces best-in-class together. The third area is firms are often unclear on the regulatory views on these solutions. And for many firms, this forces them to raise the stake. So for many firms, they're unclear on the regulatory position, and what they end up doing is avoiding adopting new and emerging technologies because it is a perceived risk that it's more dangerous. And they feel safe in the no one got fired for buying insert brand name fallacy. And on this, we challenge firms to be more ambitious and move forward in their way of thinking. And for those that are nervous around this, we encourage them to review the FATF guidelines on new technology and digital ID solutions that exist, where the benefits of new technology are clearly laid out, and these are shaping regulatory thinking across the globe. Within the UK, the FCA has been massively pro-innovation and technology for years, and has previously commissioned our services to outline what technology is available in this space, so is well aware and on top of what's available out there. And the fourth area is firms often don't know where to start. So firms are aware of this new technology and the potential it holds, but struggle to take advantage of it. They don't know where to start or where to begin, and are simply overwhelmed by the challenge. And identifying vendors in a congested marketplace is an incredibly complex task, and in many cases can require support. So we've helped firms to mobilize vendor selection initiatives, to help them shortlist best-in-class vendors with suitable propositions based on the issues they experience. And we do this by drawing on our knowledge of the marketplace that exists and where this has been done before within other clients. So that's a short summary of what new technology is out there for KYC and onboarding and some of the challenges that exist across the industry in adopting it. I'll hand you over to Craig now to discuss how the customer angle we're making risk and compliance decisions is taken into account. Craig, over to you.
Thanks, Alex. I mean, as Alex has outlined, this is quite challenging stuff. There's clearly it's been difficult to get right, and I think to a greater or lesser extent, I'm sure that a lot of those challenges resonate. I think from an AML technology perspective, one of the overarching themes that we've certainly seen is, I guess, a clear lack of customer focus when it comes to AML technology investment. So investing in the types of technologies that Alex has described, rarely, apart from very recently, has really been an investment in the kind of customer experience, the customer needs, and really kind of awareness of that. So I'm just going to take a few moments just to talk through some of those observations. I think financial crime risks and compliance functions more generally are operate in silos. They can be have grown at scale, can be quite large, kind of manual operations that use very decentralized data across different functions. Again, from a process perspective, can be highly manual, lack of joined up. And there's good reasons for that. I think the way in which regulatory regimes and the pressure in which organizations get put under externally and also internally from some audit and assurance functions means that that investments in AML technology can be very reactive. They can also be very defensive. On this slide, we talk to what we see when we speak to organisations in the market and also vendors from their perspective as to what really is has been the business case for investing in AML technology. And over these regulatory compliance has been absolutely key, unsurprisingly. So actually investing in technology is going to prove the robustness and the compliance response from organisations. I think secondly, operational efficiency, how to do things quicker in places, how to perform repeatable tasks in a slightly more smarter way. And then customer experience typically comes third order. And I think what's interesting in this is despite there being a key regulatory and operational challenges, I think often the customer experience being really deprioritized in that list has created several challenges for many financial services firms across the market and across the globe, as we found out. I think one of the key challenges is inconsistent and cumbersome onboarding journeys. I think that has impacts internally within an organization in terms of actually the touch points in particular customer has, whether they're touching different parts of the organization, maybe taking out multiple products, touching separate business lines, and the extent to which that becomes very challenging to manage as a firm, not to mention what that feels like from a customer perspective, perhaps being asked for the same information from, as they see it from the same organization, when the reality might be that actually that's different functions in the bank requesting said information, and I think there's always been an element of a disconnect with regards to onboarding. Again, I've touched on the reactive nature of developing capabilities, really kind of investing in developing long-term fit-for-purpose technology capabilities, operational capabilities that really stand organisations in good stead for a much longer time period. To have long-term sustainable financial crime compliance is extremely difficult when organisations feel under the pressure, understandable pressure, but have to take a very reactive approach to developing those capabilities. I've touched on manual processing. AML, KYC in particular, it's all about data. It's about collecting data. It's about validating data, storing that data, making decisions, producing really good quality MI, being able to report internally as well as externally when required. And I think this really has created a reliance on manual processing of that data. There's perhaps over the years been a lack of trust in terms of how data that's sought from sort of advanced means can be processed. Alex has touched on a lot of themes with regards to how data can be pre-filled, can be managed in a slightly different way, shared across the organisation. But historically, that's been a real challenge. And the fourth area around just the size of these operations, if we think about the unfortunate situations with regards to big remediation type works that happen within this space, the quickest way often to deal with these problems is to create large, often inefficient operations that rely on the manual process that we've talked about, that rely on some of the sort of reactive approach to developing people and capabilities. And many financial crime operations are massive in size and cost as a result. And again, I think kind of really thinking about the regulation and the operational components first and second, and not the customer, has absolutely contributed to some of these challenges. So what does that mean? So if we move on to the next slide, Joe. The good thing we're seeing in the market is that over the past 6 to 12 months, we've seen a real positive change in how organisations are starting to shift in that dynamic. And I think some of that shift is driven from internal factors, and some of it is driven by external factors that we're seeing within the broader society. I think first and foremost, I think we can all say that we're seeing customer expectations change dramatically as technology advances and continues to advance at the pace that it does. I think the expectations that financial services firms on customers have around digital, around self-service, about a demand for faster, straight-through processing is at an absolute all-time high. Secondly, I think banking as what was often deemed as a very traditional service offering, I think that has started to change. We're seeing a lot of convergence in banking as an industry with the likes of the hospitality sector, with the likes of, as we start to get Airbnb type services, Instant, Uber, all these types of brands that offer something that seem to be quite innovative in the market. People expect that from a bank. I think the days where banks were kind of given this tag of actually it's okay that we have to be highly reliant on, to Alex's point, digging around the back of the cupboard for ID type documentation to take into your bank, that's completely changing. And I think therefore financial services firms must be on top of that change. I think the final point, kind of talking to some of the themes that I mentioned in the previous slide, is really that I think there's a huge imperative on business units within these organisations of working closely together, with huge cost pressures, the cost of compliance, both from a financial crime perspective, but also sort of broader compliance requirements increases. One way in which we see a lot of organisations start to reduce some of that cost and that overhead is by collaborating more effectively internally within the organisation. Often the best way to do that is to consider the customer angle, to consider an end-to-end customer onboarding journey that's consistent, that reuses the processes, technologies, in a way that both benefits the customer, but also benefits and simplifies and kind of breaks down some of the barriers within inside an organisation. So what does that mean then? What do we therefore think is, are some of the best solutions out there that we're speaking to customers about, and we see sort of trends that are working well in the market? First of all, we see this concept of developing a North Star vision for your customer experience. And what we really mean by that is getting an organisation across a firm, no matter how big and how small, to agree on a really kind of long-term 2-year vision for what a customer experience should look like within your service offering. Secondly, from how do you implement that vision? It's all about thinking big, starting small, and scaling fast. So really kind of using some key agile principles here, but think big, dream big. There's huge opportunity to be had and to do things differently. Setting that 2-year vision and agreeing on that as an organisation at that more senior level is absolutely essential. But starting small, so breaking this down into increments, being very realistic on delivery, as I mentioned, slicing and dicing that vision into into real kind of tangible pieces is really key. And thirdly, scaling fast, to address experience, customer experience, technical operational change in one go often requires you to deliver at pace. And I think being able to kind of get that think big, but start small and scale fast and get all those unique characteristics of working in that way is a critical sort of delivery enabler. Thirdly, I've talked a little bit about internal barriers, and again, it's more important than ever to remove internal barriers. Often, one of the key ways in agreeing that North Star vision is to get everybody together with the organisation. Sounds extremely obvious, I know, but I think working together to agree that vision, to get everybody, aligned on that and agreed on the direction of travel for the organisation, but most importantly for your customers, what do you want to be known for, what do you want to be famous for, is essential across the firm. And time again, we see different business units, different countries, within an organisation taking a hugely different approach, which is absolutely unnecessary. And the fourth point, really, to kind of talk a little bit about what Alex mentioned, is embracing the specialist providers. I think gone are the days where kind of the one-stop shop, end-to-end service providers, where you might get particular strength in a particular part of your financial crime and AML technology landscape being a strength, and then mediocre services packaged up in and around that. It's really about kind of slicing and dicing that, their different requirements and how you want to basically to invest in technology and stitch it together. So all the kind of pieces of the puzzle that Alex talked about, those pieces are getting smaller. So as new fintechs emerge and new sort of capabilities in the market, lots of niche providers are emerging, but really kind of embracing what's out there from a vendor perspective, from a technology perspective, to be able to kind of be really ahead of change, but more importantly, customer focused, will be absolutely essential as we go forward. We move on to. So this is all fine and well, but we find ourselves in really strange times, and certainly sitting in an empty office today, delivering a session like this rather than us sort of being able to participate more closely is a sign of that. And not only from a customer experience perspective, it has the world kind of turned on its head, and financial crime is an absolute massive part of that as well. So the pandemic that we find ourselves in with COVID is having an undoubted impact on the world of financial crime, and therefore how financial crime prevention activities are being shaped. Really, what we're seeing here is a few kind of key issues that are emerging. I'm sure many will resonate with you. We're seeing new threats and fraud typologies emerge. A lot of our clients have been speaking to us recently around, good use cases around things like misuse of government state aid. That's been global with the increase in governments supporting small business, supporting individual consumers through different schemes. That's been a rife area for lots of suspicious activities, misuse of those funds from the government, which has led to increased fraud typology, and extremely hard to be able to sift through that. Another area is, as we embrace digital, as we move away from engaging and using face-to-face interactions and cash and reduction in society, I think that increase in digital banking, digital sort of way of life, working from home, has absolutely created a whole new raft of social engineering and phishing and other scams. There's so much vulnerability in the market at the moment, and unfortunately we're seeing a lot of organised crime and cybercrime emerge, taking advantage of those vulnerabilities. The third area we're seeing, which is quite a specific use case, but something that has been very prevalent in many of the countries that we operate in, is around threats related to Medicare. What we've seen across governments is that there's been a very temporary, albeit a poignant reduction in the way in which public procurement has the standards for which governments and countries are sort of buying essential services through these really difficult times. And we are seeing a lot of organised crime who are taking advantage of a lot of governments, reducing the time in which they take to make procurement decisions, the governance they have around some of those procurement decisions. There's been all sorts of ways in which contracts have been structured, payment up front, etc. And we have seen that a lot of our clients that we work with come to us to help them to navigate that space, to help them understand that. And I'm talking about both the public sector and private sector challenges within the Medicare space. And finally, and Alex really kind of touched on the role of the regulator from a technology perspective, but taking a step back more broadly, There's been a significant backlog with regards to reporting of SARS, with everything I've mentioned above and all the suspicious activity related to the new threats, increase in cybercrime, specific use cases such as Medicare. That's generating a significant amount of internal money laundering suspicious reporting as well as external. That creates a huge demand within the organisation to keep up with that pace of investigation work, but also externally in terms of being able to review to review those key reports. It's creating a huge amount of work. And the other component is regulatory enforcement. We're seeing, the number of skilled person reviews kind of going on, within the UK itself, but actually kind of their equivalents across the globe. We're seeing regulatory enforcement being overloaded. We're seeing timescales changing significantly from reviews. That sometimes dragging those regulatory enforcement activities out can be painful for organisations. But on the regulator end, they just really struggle to keep up with the pace of change and the threats within the market. So that's some of the challenges we're seeing more recently as a result of the pandemic. Therefore, tying this together with what I was talking about previously, I think this really strengthens the need to have that North Star of customer perspective. In addition to coping with the external demands that are being placed on organisations, I think there absolutely is a real key to focus on that customer perspective. First, what we hear is customer needs. They don't just expect exceptional customer experience, and I think this is as critical as ever. There's a vulnerability in the market. Business customers, individual customers, huge entity type customer relationships. They absolutely need that sensitive customer service, and being able to do that in this sort of really different way of working is a critical element to navigate in these difficult times. And the second point on issue resolution, again, linked to vulnerability, we're seeing a lot of customers struggle to keep up with customer complaints or customer concerns that are at an all-time high. Unfortunately, there's many of our customers in society are dealing with a lot of detriment at the moment, whether that's from the frauds and the sort of new typologies that I've discussed in the previous slide. The way in which organisations respond to that is absolutely essential. And we hear a lot from the broader market people that say, the customers that the organisations that can continue to work side by side with their customers to work through resolutions clearly and concisely are going to be the organisations that kind of quote unquote win through these really difficult times. And I think from a financial services perspective and responding to financial crime related concerns is a really key use case of that. And finally, adapting to new ways of working. I think from we're all having to work differently, and the majority of you are dialing into this session from the comfort of your homes. Not only do organisations need to adapt to that new way of working in terms of, from their own perspective, how do you onboard customers when you have to kind of move out of a call centre environment or a particular in-branch environment to working remotely. And there's been some organisations that have embraced that and that fantastically. There's others that have really struggled. But similarly, how do we kind of reach our customers when the world is changing? So I think it's very key in moving very, very quickly to adapt to these new ways of working. It's going to be essential in the coming months. And finally, what can you do and what should you consider? So in addition to what I've just mentioned, I think there's some key takeaways that I'd like everybody to consider. Firstly, it's embracing the change and not to shy away from it. In reality, a lot of what we've talked about and a lot of kind of what's happening as a result of the last 6 months, there's nothing really new. There's not new technologies that have emerged that are going to help navigating these difficult times in a much smoother way. But what is true is that a lot of what's happened over the past 6 months is accelerating some of the plans that are already in place. So from our perspective, the organisations we're seeing make the most impact in delighting their customers while also hitting their compliance and efficiency metrics as well. It's all about embracing change, accelerating some plans. Secondly, looking at the automation self-service, again, the industry's been moving that way anyway. It's just moving there much quicker. And the third point is to consider that sort of joined up channel strategy, and again, we hear the phrase the new normal, how continuing to work around onboarding digital self-service, blending that with more traditional offerings is going to be, again, key. Nothing new there, but I think accelerating the adoption of some of these activities is absolutely the way forward. I'm going to pause there because that's exactly 15 minutes to go and hand over to Ian for any questions. Ian, over to you.
Yeah, thank you very much, Craig, and to Alex. We have had a few questions come through. The first I wanted to ask is maybe quite specific, but you might be able to answer. And Alex, I'll probably turn to you first. And that is, do you have any sort of tick sheet to show what functions specific vendors offer within their package? So I don't know if Alex, if you could maybe comment on that, please.
Yeah, certainly, Ian, and good question, and probably referring back to the polling questions, one that a number of people struggle with. And from what we see, there's loads and loads of vendors out there. It's very hard to determine who does what. The literature online is difficult to determine. So what we've actually done is develop what we call a RegTech database, which pulls in over 700 RegTech providers from across all sorts of risk and compliance areas. Within that, there's an overwhelming amount of financial crime, and some are relevant for onboarding KYC, others are more relevant for other parts of the process, such as transaction monitoring. But within that database, what we've pulled out is the capability or the use cases that they meet, so whether that be ID&V and specifically within that, what they do, or others, and also where they are strong or weak relatively in different geographies or with different product lines, for example, private customers or corporate customers or institutional customers. So we've done that analysis, and we do work with a lot of clients across the globe to help them, I guess, cut to the chase a bit and shortlist their vendors and remove that need to have to find that proverbial needle in the haystack.
Okay, thanks, Alex. I'll move on to the next question. How much of a challenge is siloed, unstructured, and/or dirty internal data to firms' ambitions? And what are they doing about it? So talking about siloed, unstructured, or dirty internal data.
Yeah,
who's best to pick that one up? Craig, maybe you.
Yes, I mean it's another really sort of prominent point. I mean, I think as Alex had mentioned, when we talk about data aggregation, a lot of what everybody's kind of mind jumps to can often be external data. So looking at public data, how to sort of source data to be able to rely less on your customers to obtain data, and to be able to do that in a nice way using external data. However, as Alex had mentioned, one of the key points that's often overlooked is how to actually make the most of the data internally. And we're starting to see, again, from largely driven by cost cutting, but also as that customer focus increases that I talk to, is around actually organizations investing heavily in structured data and sharing of data, more importantly, collaborating internally with an organization. So, that single customer view, that's an absolute, I would say a top 3 priority for many organizations that we speak to. So yes, it's extremely important. I think it's also very difficult. I mean, I think, it's not a new concept, but one that, again, I think is being accelerated. I think the key aim there is to be able to have people internally in the financial crime operations move from collecting information to validating information. And again, using that business case is absolutely essential when it comes to the use of that sort of internal unstructured data, sharing it across the organization more effectively.
Thanks, Craig. Alex, were you going to say something?
Yeah, the thing I'd just add to that, Ian, is obviously it's massively beneficial where data can be sourced from without the customer even knowing, to create more frictionless processes. But I think the other thing we see is there's a huge amount of data that is gathered through the onboarding process that isn't used effectively to help with operations, and finding ways by which you can make the most of that data is massively beneficial. So, for example, we've seen within data point to things that aren't quite working right within the risk control environment, either too harsh controls or too lenient controls that either expose weaknesses or create operational problems when onboarding customers. And we also just don't see enough of data onboarding being used for other elements of the financial crime process and how it feeds into interactions with a client, either through ongoing due diligence or transaction monitoring or other stuff at the back end. So I think having it all in one data lake or centralized place where it's easily accessible and can be interrogated by different parts of the business is key. But that's not a new challenge. It's not something that's unique to financial crime, but again, has massive benefits for it.
Great. Yeah. Thank you. Thank you for that. I'll move on to the next. Well, there's sort of two questions that have come through, and I'd say that there's obviously a link there, albeit they're separate questions. The first question, I'll read them both out at the same time and then allow you to take them together if you want. The first one is about the importance of public-private collaboration in this space. It's obviously something which is quite dear to the heart of UK finance. It's one of the things that we like to promote. So I'd like to get your views on the importance of public-private collaboration for its success in combating financial crime and also in the way it's evolved. And also in light of COVID-19, you always want to try and get that into any webinar these days. So if there's been any particular changes in light of COVID-19. And then the second element to the second question, which is sort of related, is do you have a view of how the regulators see this particular topic? So the regulators might be part of that public-private collaboration, maybe along with government, law enforcement, etc. So I think the first part is, the importance of public-private collaboration. Maybe if you could talk a little bit more about that. And then secondly, about whether you've got a view of how the regulators see this.
Yeah, I mean, in the same way, UK finance are certainly a message that you guys have been very clear on, and we've worked, before with you and had previous sessions on the importance of public-private collaboration. And I think that, to your point around COVID, I think that's absolutely, again, accelerated how important that is. I mean, I think organisations, particularly, financial services institutions, banking space in particular, I think there's never been a more sort of stronger, case and need for both institutions to be working more closely together, whether that be financial intelligence units being a bit more collaborative and sort of sharing information on events and suspicions that they're seeing, whether it's sort of sharing on more broader trends. This is all new. So I think the last time we probably spoke on public-private collaboration, there was like long-standing issues. I think at the moment, everybody's really struggling to make sense of some of these threats that I've talked to before, and the fact that there's a lot of new behaviours, a lot of new suspicions, new typologies, and I think organisations being able to share first and foremost amongst themselves at an institutional level is going to be absolutely essential. I think kind of broadening that out in terms of therefore how do you share that from a private sector perspective with the public sector, being able to share with law enforcement, being able to share with other public bodies, being able to get messages out through trade bodies and actually be able to communicate on behalf of the industry, again, is extremely important in this really uncertain time. And I think from a regulator perspective, we're definitely seeing them embrace some of those themes. I think there's absolutely, we've seen some quite complex investigations in some of the Medicare space as mentioned, or misuse of government state funding, which again, when institutions are investigating that and indeed reporting on that, I think getting a different perspective of organisations that are sharing that information or seeking advice is something that I think the regulator is extremely supportive of, because I think they recognise that organisations are up against it a much more macro way than they ever were before. This is much less about organisational inefficiencies at an individual level, but actually dealing with some big themes that, to be honest, people need to be collaborating on. So I think we're seeing the regulator be very responsive to sharing across organisations, both within institutions, but also externally as well.
Thank you, Craig. Alex, did you want to add anything to that?
I'll maybe focus more on the regulatory viewpoint. I think
go ahead.
It's a good question. One we sort of talked about in the polling is that often we hear a lot of people pointing to uncertainty around regulatory expectations and whether there is scope to adopt new technologies. And I think that's fair in certain markets where the regulator's not been very clear on their appetite for this and maybe being a bit conservative. In the UK, though, I think we've seen the opposite, and actually the FCA has been quite open and transparent and quite pro-innovation and is looking to promote new technologies. They see the benefit of them, and they're also focusing on collaborating with other regulators across the globe. So, for example, the FCA recently hosted a tech sprint last year with a number of US regulators where the sole focus of that was on how technology can be best applied to tackle financial crime. So I think there is clear appetite from them and they see the benefit of it. But yeah, as Craig says, there's also an overwhelming amount of challenges that need to be tackled, and that requires collaboration across all sectors of the economic crime ecosystem, whether it be private sector, government, policing and law enforcement, and the regulatory bodies as well. So I think we know from our work across that landscape that public-private collaboration is a major focus for them. There's some good examples within Gimlet. That's a great example of that, but frankly, I think everyone acknowledges that more needs to be done, and they're working on that. So we're excited to see how that evolves over the next few years.
Yeah, absolutely. And I think, as you rightly say, as these challenges get more complex, actually the need for public-private collaboration is even more necessary, because it can't just be left to the private or the public sector. I think joining forces and working together, Gimlet being a good example, is absolutely necessary to combat this. I've got one final question, and then we'll wrap things up, if I may. So the next question is about digital ID. So how do you think recent developments in digital ID in the UK in particular will change this landscape? And the questioner asks, how relevant is the Scandinavian experience? And you use the example of bank ID. So I don't know if you're able to touch on digital ID in this context as well. Is that something either of you are able to answer? I'm not sure if it's an area of your speciality on digital ID.
Apologies, just I heard it the second time you mentioned it. I mean, I think, Alex, I'm sure you'll have a lot to add to this from some of your recent experience. I think it's complex. I think the Nordic example is a good example. We often see a bit of a challenge where you can have from global organizations. It's really hard to harmonize the different customer experiences, the different onboarding, where you have parts of your jurisdictions in which you operate that have, for instance, Denmark is a really good example, Sweden, etc., where you've got that really strong culture of using their government IDs. How do you therefore replicate a similar experience where you onboard a lot of customers where it's been more of a challenge? And actually that's one of the biggest challenges that I've seen, particularly working with organizations at Nordics. It's you almost get this situation where, from a digital banking perspective, the way in which you ask people to log in and to provide information, it's much more straightforward for some parts of the world and so customers in some places, but it's really difficult in others. And in terms of, back to my point around customer focus and making things quite frictionless, but also consistent, we've seen a lot of challenges with kind of harmonizing those from a customer experience perspective. What happens if you spend a lot of time in a country that doesn't have those types of IDs and a lot of time in the country that do, and actually you're going to be able to kind of work and offer your products and services to those types of customers. It has been really difficult. So consistency is the key challenge that I see. And being truthful, I don't think I've seen many organisations nail it yet. I think it's still a long way off. It's very imperfect. I don't know, Alex, have you got anything to add from your perspective?
Yeah, I think you're definitely seeing new vendors and technology out there that makes this possible. The lack of sort of a UK national identification number does make it a bit tricky, and I think that's where some of our Scandinavian counterparts are fortunate where they've got things like NemID, which is, as Craig said, well established and well in place within Denmark. So I think we expect there to be a lot of evolution of that over the coming years, and there is technology out there. The regulatory environment is getting more and more comfortable, so there's a space that will change things. I don't think it will happen globally all in one time. I think different regulators will push ahead and different geographies will push ahead and others will slowly catch up. And that's in effect what we see happening now, and probably see that trend continuing over the next few years.
Okay, great. Well, thank you, Alex and Craig, for that presentation. Thank you to the audience for asking questions and for those responses to those poll questions as well. We've just gone 1 minute over 1 o'clock, so I'll wrap things up here. So thank you, Alex and Craig. It's been really informative. I hope it's been really useful for you in the audience. And I'd like to wish everyone a very good rest of the day. Thank you.
Thanks, everyone.